I'm excited to have you on. I've seen you on your channel several times. Your channel has been blowing up, and that's awesome. It's awesome to see, all these stock channels just really exploding in growth and people being more interested in stocks. And I saw you on my buddy Trey's channel, and people loving you there. And I just thought I had to get you here. So welcome, and thanks for joining.
Thank you, sir, for the invite. It's my pleasure, and apologize to my viewers out there who I told them I'd be on half an hour after my last show, and I missed the timing, and we're a little later. But you know what? I needed the rest, and it worked out perfectly. So here we are.
It's gonna be a better show in the end. That's also kind of my fault because I was doing everything in your time zone, and then I wasn't thinking when I said it. And yeah, it's no big deal. We're here now. Also, watch out for the Bruce imposters in the chat. Legitimate Bruce isn't talking smack to anyone, I don't think.
No, never do that. Never.
So if we could start off with just a little bit about your background, I'll throw it over to you. We can go from there.
Well, I'm 65 now, and I started YouTubing at age 62. That was August 2017, and I created my first YouTube channel, which is this one right here, Traveling with Bruce, TWB. And I love talking about cruise ships and going on holidays and everything in the travel news. And that was going great. That channel's got 63,000 subscribers, but it kind of stalled out last summer when the pandemic just ground everything to a halt. And I had been thinking of a second YouTube channel for a long time. And when I created the first one, I kind of was debating, which way do you want to go? Do you want to do like a stock market something, investment something, because of my background? And I thought, no, I want to go traveling. I love to travel. I figured that the perfect plan was create a travel channel, talk about cruise ships, and organize group cruises to get a bunch of my viewers to come with me. And if I can get enough of them to come along, then I get a free cabin with my wife, and I would get to go for nothing. It's fantastic. So that was working perfectly. We had a group cruise booked for December just a few months ago, and we had a second group cruise booked for February just last month. Both got canceled, all blown out. And so now we don't see a group cruise in our future until probably late 2022, I suspect, maybe 2023. So created the stock market channel this past summer. I thought, okay, well, let's do that. But again, I didn't know the theme of it. I didn't know what I was going to do with it. So I just created some videos, and I thought, why don't you talk to people and give them information about the stock market and just do it in a plain English kind of way? Because there are a lot of folks out there probably confused about the terminology and all the fancy words that the Wall Street guys like to use. So I decided, let's go with a plain English tack. And I started off with videos like how you used to trade stock in 1980 versus now, what it was like then versus now, because I'm taking advantage of how old I am. And then terms and what are buybacks. And I talked about Elon Musk getting stock bonuses and explained how those worked. And then I came across this article about the most shorted stocks on the New York Stock Exchange. And this had to have been a report from last year, July, maybe June. And there was GameStop at the top of the list. And I did some research on it, realized it's been on the top of the list for a long time. This was not a recent phenomenon. But I dug and I made a video about it. And then I promised my viewers I'll stay on top of the story if there are any changes. And sure enough, I came across more changes, more updates, and found out that the company had bought back 35 million of their own shares to combat these shorters. And they went from 105 million down to 70 million shares outstanding, and they paid $5.19 a share to buy all those shares back. It took them, I think, a year, using their own company money to do it. Great job. And the short still didn't go away. Then activist investors started getting into the company, and then we had Mr. Ryan Cohen, get involved in November, December. He kind of breached that 5% ownership level, which meant he had to file with the SEC to disclose the identity of his fund that bought the stock. And then I dug into him and figured out, oh man, look at this guy. This is interesting. And I've realized this guy isn't here to buy some stock and hope it goes to $10 from $5 or from 5 to 15. No, he's coming into the board of directors. He's up to 13%. He's got 9 million shares, bought it all off the street. And I think 5 million of the 9 he bought, I bet you he ended up buying it off of short sellers who were trying to keep the stock down while he was buying it up, because he was buying it up quickly and he was getting 200,000 and 500,000 share chunks of stock at a time. And that's telling me this is not retail sellers selling to this guy or disgruntled people trying to get out. This is a coordinated hit job from some, short seller groups, whoever it is. And then he quite happily spent 76 million of his own money to buy up 13% of the company, and got onto the board of directors with two of his buddies. And there's three of them, all from Chewy, because that's the company he co-created, the pet food supply company. And the plan is to convert GameStop from a brick and mortar exclusive store to become an e-commerce powerhouse seller, and greatly reduce the number of stores, which is the smart thing to do in the current environment. And so that's how this channel started for me. Up until about, I would say, December, late December and early January, I was still just doing a video every week or so, maybe 2 videos. And the channel had about 1,200 subscribers, and it got monetized because I had 1,000 subscribers. And I had 4,000 hours of watch on that whole thing that all YouTubers have to go through. Because at first I wasn't in a hurry because I had the other channel that I was working on. But then I got to the point of monetization, and it just coordinated and fell into place that the GameStop thing started to go. And I was reading up all this info, updating my viewers on additional videos. And it was one morning, I was up at about 4 in the morning, and the day before, the stock had gone from 18 to 39 or something like that. And I was up really early watching the pre-market on CNBC, reading up on anything I get my hands on. And I don't know what happened, but something just yelled at me in my head, go live now. Get on the camera, get your computer up, get your lights on, get you in front of your set, go live immediately and start talking about what's happening here, because the guys on CNBC are totally misrepresenting what was happening. It was all this Wall Street bets promotion. Small little investors are the big problem of the world. They're the enemy of the markets. I'm going, this is crap. And so I got on the air within 15 minutes. I had everything set up. I was frantically getting my hair all much. And I went live. And I ended up doing about a 4-hour impromptu, no prep show. And it's not the first time I've ever gone live before on that channel, because I had done co-live shows with my other channel, but it was just a way to get some of my other folks to come onto this channel and maybe get me to 1,000 subscribers faster. But now I was exclusively aiming at the stock market crowd, and they really reacted. And the next morning, I got on the air with about an hour before the opening, and within 15 minutes, I had 1,500 people watching me simultaneously. Within 2 hours, I had 5,000 watching simultaneously. And wow. I stayed on for the whole day. I went 7 straight hours, no bathroom break, no stopping, just went at it. And I told everybody, ask me anything you want. I'll try to answer to you in a plain English kind of way. I'll try to interpret what's going on out here. If you have a press release that you know of, I'll read it, and I'll read it on the air with you, and I'll try to interpret it. And that's how it kind of evolved. And I started doing all of a sudden 150 to 200,000 views a day on these telecasts as the stock went nuts. Wow. First, right? It just went insane. And I've kind of tried to now do a 2-show program. I kind of do 3 hours in the morning, 2 hours in the afternoon, and have a bit of a break in between, and kind of take it from there. So right now I'm still winging it because I do not know where GameStop is going. I don't know how the viewers will keep reacting to me as GameStop will eventually play itself out. I thought it had done that a week and a half ago. I thought it was all over when it had gone to the 4 or 5 people and came back. I thought, oh, there you go. I'll just hang out with these folks now and just be, Bruce, the stock market guy, to try to interpret whatever, And so I started coming up with recommendations of stocks that I've been following, I like, and I explained why, and people like that. And then I thought, well, maybe I could offer my time. I could say, how about a 1-hour private consultation with me for like $400 an hour or something like that. It's not like $1,000 an hour you'd have to pay if you went to New York, but it's not $20 an hour. I mean, I don't want to do anything for $20 an hour like that. So I thought, I'll do it for $400 an hour US. Let's see how many take me up on it. I'm just overwhelmed. I'm booked now for 3 weeks in advance.
Oh man,
sessions. It's just,
but you got to raise your rates.
You just wonder, right? And I kind of go, well, again, this could be an initial wave. Maybe this is just an initial 3-week, 1-month thing, and then it'll settle down. And I don't want to kind of backtrack and do anything like that. Right. Well, I started doing these one-on-ones 2 weeks ago, and I do them Saturdays and Sundays because those are the only 2 days I have left. I'm on 5 days a week, 5 hours a day. It's fascinating. I talk to people one-on-one, and I hear the frustrations that so many people have. They have nowhere to go for the kind of needs they have, for information they have, because everyone's story is different. It's not like people are all the same. Everyone's different. But I'll meet people in their 40s who are saying, the last 10 years were okay, although, with the economy and stuff, whatever. But now my parents are getting on, and they need me to kind of take over their affairs and help them with their house payments or organize their affairs. Mama's ill or dad is very sick and this kind of stuff. And now I have to look after their portfolio, and I don't know what to do, and I'm terrified. And so I'm here as kind of that fatherly figure. You're talking to a guy. Yeah, I'm not the guy at the Thanksgiving dinner that, is a smart alecky old uncle. Your relatives don't know me. Your friends don't know me. So whatever I tell you is coming from here. No one told me to tell you this, to give you a message. It's just Uncle Bruce talking to you one-on-one, and it's really working for people. And I'm shocked at how many people out there cannot get financial advice, the basics that they need, because most brokerage houses in the last 20 years have disappeared. There used to be a time in every small town in America and then here in Canada, there was your local stock brokerage office, and you had 2 or 3 or 4 people in there, and you could walk in there and sit down with a stockbroker, make an appointment to talk to them about your taxes or your retirement plans or whatever. Today, it's all here. It's all on this. Everything to do with the stock market and stockbrokers is here, and every stockbroker wannabe is now creating platform trading scenarios where, we'll just help millions of Americans become investors by letting them trade themselves commission free on the platform. It's great. Well, it's perfect for a certain segment of the world, yes. But for those folks who've never traded before or just getting into it, I'm hearing horror stories of people who are going, I didn't know what I was doing. I thought this button, but I guess I hit this button, and I guess I didn't buy this. I guess I shorted that, or I thought I bought a put contract, but I actually wrote a naked put contract. Like, I'm just going, what is going on here? In 1978, I took the securities course, which I had to pass, and then that took me 6 months, and then I became finally convinced a stock brokerage firm to hire my sorry ass. I was 24 years old with no experience. I finally convinced a brokerage firm to take me on, and I studied and absorbed and watched everybody in the office and quickly figured out what's going on. And then about 1980 and 81, the options market came into being, and you had to have an options license as a stockbroker. Just because you're a stockbroker doesn't mean you could do options. So I had to take another course. That took me 3 months of study and exams to be licensed to allow me to talk to a person about doing options trades. That was a grind. I did that and went forward. Now today, heck, you can open up an account online in 10 minutes. Just click the buttons here, fill in your name and address, put in your social security number, I guess, banking information, hit enter, and you got yourself an account. And within a couple of days of applying for a margin account and an options account, you're ready to play options. And there are people buying and selling options that do not know what it even is. They don't actually get it. And I'm amazed. The SEC is asleep at the switch. There's crickets going off at the SEC offices somewhere. The regulators are nowhere to be found. And there are probably, 100 million Americans right now buying and selling stock from the comfort of their house. You can go to your bathroom and do a number 1 or a number 2 and trade stock and options. It's unbelievable. Right? So
what would you say is like the top consumption with people, or top question that you receive that you feel needs addressing?
Oh gosh,
maybe top 3.
Yeah. You know what? I'll start talking to an individual, and I'll talk to them like I used to talk to a prospective client that I would get back in the 1980s when I was an actual, stockbroker with a physical office. And there were times where I would find I would come up with a lead for a new client. I would go to their office to meet them with a suit and tie and polished shoes, and sit down and go over their situation. And that's what the customer expected. They wanted this personal service. In other cases, my customer perspective might come to my office, or other times it would just be over the phone. But I talk to these people today, and I ask them basics like, how old are you? Are you working? Are you working from home right now? Will you be working from home going forward? Will you be able to maintain an eye on the markets when the economy opens back up? Or are you going to be in your day job off-site somewhere? I mean, all these basics, because these folks have this, and they think that the firms that are offering this service are basically telling their customers, you take this with you wherever you go, and you're always in touch with the market. Well, that sounds great. But if you've got a day job and you're driving a truck all over the place, you can't be driving your truck and doing this all the time, or you're going to get into an accident. You don't have every second of every day to keep an eye and monitor your investment account. And if you're playing the options market, oh my God, you are absolutely, you're just throwing a firecracker into the forest and hope it goes off and nobody gets hurt. You're totally, inept at that. You have no way of covering it. So I go over stuff like, what about your retirement? Have you even thought of your IRA? Have you got a Roth? Does your employer contribute to you? The basics of investing is what I'm talking about with these folks, and they're going,
no
one's ever asked me that.
Oh, I think we have an echo.
Okay.
I might have fixed this. Let's see. Now I'm hearing it. Test. I'm not sure if there's still an echo. Let me know in the chat.
If anybody hears it, let us know. Apparently I'm a troll. Someone says I'm a troll.
Well, there's plenty of trolls in the chat, so I guess it's just me. Am I still echoing? Let me know.
I don't hear you. Some folks
might be fixed now. It's gone? Okay.
All right.
Perfect.
So I get basic questions, really basic questions. And then others, of course, have more sophisticated questions who they kind of know what they're doing, but then they realize they don't know a lot. They think they know a lot, and then they talk to me for 10 minutes about different strategies, and they go, oh my God, I'm a minnow in a Shark Tank. I am, and I remind them and I educate them. I said, look, you are up against, when you're buying and selling stock or options or whatever you're doing, you are competing against the sharpest people in the investment business there are. These are young, men and women who have master's degrees and all kinds of stuff. They're fully trained by their employers. They're in their 30s. They're at the top of their game. They've got 10 years experience, and they've been given a $20 million or a $50 million or a $200 million account to trade in for the house money. And you're up against people with trading systems with 15 screens in front of them where they can outmaneuver you every way to Sunday, and they can outtrade you. And this is who you're competing against. And you're trying to make money in a market against absolute pros. And the only way you're going to win is if you don't make as many mistakes as you're making now. Because everybody eventually, if you buy enough stock and take a chance on different stock stories, every once in a while you get a winner. You get in at $2 and it goes to $4. So, well, way to go. You doubled your money. That trade has got to pay for all the mistakes you've made in the last number of trades you've had. And there's a lot of folks out there who get a trade and go, hey, I'm back to half my money. This is great. And I'm just going, oh my God, the hedge fund guys have losing trades too. But they don't have losing trades like most people have losing trades. They lose.
Yeah. Well, it's like the classic Warren Buffett quote, his 2 rules: don't lose money and don't lose money.
Yeah. And there's people out there who believe that, well, when I play the market, I always have to be invested. Even if I'm a day trader, I've got to have a position all the time, or I'm not day trading properly. And I'm going, guys, no, you don't need to do that. You don't need to carry anything. You get in when the moment strikes, and then you get out when the moment gives it to you. You take your exit, and you make sure you have stop losses behind your purchases to protect you against a sudden downdraft so you can get out alive. And a classic example of that was today. I was on live from an hour before the opening until about 3.5 hours into the day, 4 hours in, and it was just before the Fed chairman started yapping, before the Fed guy started talking, Powell.
Mhm.
And the Dow was up 100 something points, and I went off the air and I said, see you later, folks. At 1 hour before the close, I'll be back. And just about 15 minutes after I signed off, the Dow took a 500-point dump. And that's because Powell didn't calm the bond markets. And if you trade it right, you've got stop losses behind all your positions. You would have been blown out, and the market would have kept on going without you. And then you could have waited till this afternoon to either take an opportunity to come back in or wait until tomorrow to see what the market wants to open like. But that's how this goes, and that's how hedge funds protect themselves. And they have obviously insurance to guard against problems, where they buy puts or they carry other instruments to guard against exposure to large positions. But for small investors, it doesn't work that way. It's a different animal. So
yeah. Now, do you talk about your personal investments at all, or do you stay away from positions that you hold?
I have no positions. I own nothing.
Oh, really?
Yeah.
Why is that?
Not a single stock, not a mutual fund, no ETFs, no options. I don't trade. When I'm on live, I'm on live on my Apple computer right here. I have what I call my big ass iPad, the size of my head right here, and it's on to Market Watch to just watch quotes. And then I've got my cell phone right here to watch Yahoo quotation service, which came with my phone. That's it. That's all I've got, because I don't buy and sell stock. And I don't, when I talk to folks about GameStop or whatever else is going on out there, I remind them, guys, I don't have a position in any of this stuff. I have no thing in the fight here. There's no reason for me to get you to buy stock because I got 20,000 shares over here. I don't need it. I'm a YouTuber. That's my gig. I have 2 channels. I get paid ad revenue from YouTube. I get premium revenue from those folks who don't get ads. And I get donations from people who are happy to donate to my super chat to my channel. I even get donations on my PayPal account. And I tell them that up front. And I tell them, if someone is making me a $5 donation, I'm going, I really thank you for that, because that is the blood of my paycheck. I have to deliver something that makes you want to send me a donation. That's what I'm about. I have no way. If this stock was $700 a share, GameStop, I make nothing. It's you guys, and I hope you make a ton of money, and I hope you all credit me for it. Because of Uncle Bruce, I made a bunch of money in the market. Fantastic, because they're very generous when they do very well. They'll send me a donation, go, this is because of you, buddy, and I thank you. And that's it. And I'm happy now to get up to 92,000 subscribers, maybe 100,000 by next week. Take this channel to 250,000 or 1 million. I don't know how far it'll go. And if I have 400,000 subscribers, all do well on a stock one day. They'll more than take care of Uncle Bruce, and that's the way I look at it. And I sleep well at night with no worries. I don't have to worry. Like, I can look at the camera and I can just talk to my client over there, my viewer, and I don't have to worry about what my stock is doing over here. I don't have to care about this because I don't have any over here, and that's also very liberating for me. It's just
so why not just do like some kind of safe index fund or something like that? You don't have to worry about. You just no interest.
Well, going into YouTubing, didn't have any money. We were retired. We haven't been working very much lately, and with our daughter, everything, taking care of all of her needs. We were just not flush with cash, and so we have our house and we have our furniture, we have our car, and we just took care of all the basics here. And we're just entering into retirement. We're not that well off, and I put everything I had all my energy into the YouTube channel. The first one took 1 year and 3 months to make enough money to finally pay the bills around the house. And I invested.
Yeah, that's not bad. That's better than most.
Yeah. And I was doing 2 to 3 videos a day, and I was doing 6 live shows a week on that channel to bring that thing up, and got it up finally to the point where it started carrying the house. And I had a lot of donations from viewers who were absolutely enjoying the effort I was putting into this travel channel for cruise ships. But this channel here, and it's just exploded, of course, because the GameStop thing has absolutely made it happen. We've gone from 1,300 odd subscribers in December to now 92,000. Of course, this is beyond my wildest dreams. This is not in the game plan. There's no book here says, "Yep, check that one off. That's exactly how I planned it." You can't do it. So now I
haven't seen anything quite like this stock takeoff with all the, I can think of 10 different channels that are out at almost 100,000 subscribers that were at 5 or 10,000 2 months ago, and it's like, wow, that's really something to look at.
Yeah, yeah, and the key will be how many can keep their subscribers, because you've got to keep delivering
Right.
the goods to really satisfy your clientele. And this is why I'm thinking, okay, Bruce, you got to think outside the box here. You're a YouTuber. You've got a channel, so that helps you. You've got experience. You've made a lot of mistakes over there. You're not going to make now, so that's great, because the second time around it's easier when you create a second channel. But the bottom line for my viewers on Stock Markets with Bruce is give them service and give them what they're here for, and deliver, what it is they need to know. And so, of course, my comments, like yours, they just go and go and go. And so I'm trying to read as many as I can to get to as many good quality questions. But I now come into my show with about 2 hours of prep time. I'm up at 4 a.m. my time, and I'm watching CNBC. I'm looking at the internet. I'm following all the sites. And I'll have a sheet of paper all written out of things I'm going to talk about. So my first hour, the pre-market, the first hour goes by like that, because I got stuff to tell you guys. But then there's the pre-market itself, what's going on the pre-market, and then the market opening up, what happens now. So there's 2 hours right there of just endless information. And then I'm reading the feedback from my the engaged community I have. And I tell them, I'm not here just to rant at the camera. I'm here to engage with you. So tell me what you do your best. Give me a message. I'll try to read it. I'll try to catch it. And let's address any needs you have. And because it's in a plain English format, most of my viewers are not intimidated to ask me something. I've seen YouTubers where the information they provide is spectacular and it's incredibly detailed and very technical. But I can imagine that people who don't know how the markets work would be intimidated to ask the host.
Oh, yeah.
So
Absolutely.
I try to reverse it and go, okay, let's get down to this level here and make it straight English, easy English. Ask me anything. There's no dumb question, and I'll even elaborate on your question. Because once you ask me a question, I kind of know where you're going. I'll go down that road with you. And I get a great reaction from the comments where people go, I was thinking the same thing. Oh, thanks for answering that, or down that tangent, because that's what I was wondering when that guy asked that question. I thought about, what about that? And you addressed it. And that's experience. 65 years old. Been around. That's the advantage I have, and there it is.
Oh, I know that you're very bullish on GameStop. What are your thoughts on AMC?
I'm not an expert on AMC. I've been following the story casually in the marketplace, but I'm not an AMC guy. I've never torn the financials apart. I've never torn the filings apart. I've never gone into all the thing, but I have noticed, and I credit AMC management. These guys have pulled off some phenomenal moves since about last October, I think, where they were able to renegotiate debts. They were able to restructure debt. They were able to convert debt into stock. They made deals with landlords. I mean, they did what they had to do, because they're in big trouble. I mean, every theater was shut down. No movies were being sent to them by the movie theaters. The studios were holding back studio releases of brand new film. There was no inventory to show off. But they pulled off a major turnaround, and I credit them for it. But I also I look at it going, yeah, but you guys have issued a ton of new paper to do all this move. And like the cruise lines, for example, they have issued a ton of paper to survive no passengers for over a year. Same with AMC. And so the good news is they will survive. The bad news is when they open up again, they're going to be bringing in money from ticket sales. I don't know how limited they'll be with respect to how many people can come into the theater. But the bad news is that even if they go out at full capacity, they now have much higher carrying costs to be in business. They've got higher interest charges, more debt. That's going to have to be handled some way. Now, can they ultimately do additional financings once they are up and running at much lower rates and pay off high debt rates? And so maybe, but the bottom line is AMC only makes money if you buy a ticket, pick up some popcorn and a cola, and go and watch the show. And it takes them 2 hours to get your money off of you, because you walk in there for a 2-hour time frame to sit in that seat. They can't run 10 movies in the same theater. They can only run one movie at each screen, and they hope to sell as many seats as they can. I respect that. Theoretically, could they be taken over by somebody? I guess. Could they change their game plan a bit? Probably. Could they do, for example, some people saying to me, well, what about if they got together with GameStop and they had tournaments inside these theaters? And I go, well, the seats are there, but not the tables to hold the systems, and they don't have the capacity to handle 300 gamers at the same time, all going through the internet. The wiring and the fire marshals will just go nuts. I don't think so. It's a movie theater. It's designed for one purpose, and they do it well. But you know, it's been a time, and people are asking me all the time, do you think that the charts are exactly the same for the two companies? And I'm going, there's similarities, and it's not because they're the same business. It's because they've got the same gamblers, the same investors trying to play the same game at the same time. And I bet you there are gazillions of day traders who they do the same trade with both stocks at the same time because they feel there's a momentum trade in both at the same time. But that will end, and when it ends, it will go dramatically different. And you know, one will do what it does.
We're starting to see them diverge a little bit, it seems. My hypothesis from the beginning was that, you know, you have the same buyers for both. The people who are all in on GameStop were the first ones to the party with the short squeeze stuff, and then the AMC people were people who just wanted to get on a company that was potentially squeezable as well, but a cheaper price to get in.
Yeah.
So that's how we saw them, and institutional investors treating them similarly as well. But it seems like they're slowly starting to kind of do their own thing now in the last few days, anyways.
Yeah, I mean, the big difference between the two was last Wednesday, 9 days ago. That's when GameStop all day long had been between 45 and 48 bucks a share, and it was. I was on the air for about 4 hours or so. I went off the air, came back for the last hour of Wednesday's trade and the first hour of aftermarket. That's my normal afternoon show. I come back and the stock had traded 16 million for the whole day, and it was sitting at 48 bucks a share. And I thought, oh, this is going to be a snooze fest this last hour. What am I going to talk about with my people?
Right.
There's nothing going on. But you know, I cover the markets, and I cover the Dow and the S&P, and I come up with stuff to talk about. Anyway, 5 minutes into this last hour, I'm noticing the stock price is moving up to like 48.90, 49 to 49 a quarter, but then back to 48. And then about 2 minutes later, it comes up to 49.50 again, and then backs off. And I'm saying to my viewers, something's going on. I don't know what it is, but something's going on, because now this stock is trying to go up and it's getting knocked down. It's getting slapped back. It's getting slapped. And I'm thinking, yeah, short sellers are building a wall up there, and they're not going to let it go over. And the wall is 50 bucks. It's not going to penetrate it. And sure enough, I was right. There were about 30 million or more shares traded. Went from 16 million to 46 million. It was still not going over $50. I'm going, how much buying do you need on a stock that has 70 million outstanding, 20 million is held by management, 50 million by the world? You've got 30 million buying coming in, and you can't move the stock $1? What the heck is going on? And it's not like sellers were hitting giant buyers who were docile. No, it was aggressive buyers hitting sellers that wouldn't get out of the way and wouldn't be taken out. It took 50 million shares to break $50 a share, but they did it because the guys who were buying had more money than the guys who were selling. And so it went through 50, and then it hit 55 in a minute. It went the next $5 in a minute, and then it got halted. Trade imbalance on the New York Stock Exchange. Then 5 minutes later, brought it back. $70 3 minutes later, halt number 2, and then to 74.76, halt number 3, and then went to 91 with 15 minutes to go, and they didn't reopen it. And that's unusual that the New York Stock Exchange would hold the stock with 15 minutes to go on an imbalance and not let it open after 5 minutes. They shut it down for the rest of the day, because it sounded to me like a 100 to 1 imbalance. 100 shares wanted, 1 available. Million wanted, 10,000 available. No selling. And it would have gone to 150. Yeah. That was Wednesday, 9 days ago. And now we find out within about the last 3 days, we hear the juicy news that, it was definitely a short wall that got penetrated and busted. Since that time, the stock's now been in this 120 to 130 range, hit 147 today on a little spike. But the sellers, they had to deliver the stock on Friday, last week, Friday. They didn't. They didn't deliver. They don't have it. They don't have the paper. They can't borrow it. It's unborrowable because it's overshorted all over the place. They're now in a failure to deliver mode, and that's a 21-day window. They have to deliver the stock in 21 days, which happens to match perfectly with March the 19th, which is
Look at that.
Tipple Witching Hour Day, March the 19th. And that's the day that the brokerage firms have to deliver the paper or be bought in by the clearinghouse or whoever does it. I don't know who does it at market. Whatever you get it for, you buy it. So I'm sitting back going, oh my God, this is unbelievable. On the Wednesday, the guys who ran the market, who bought in, they knew what they were doing. They knew we're going to buy a ton of stock from these guys. We know exactly who these guys are because they all know each other. All the hedge fund guys know each other. We has Frank over there and Jerry and Sammy Boy and all those. We know those guys. They've got a wall of stock because we've got the level 2 systems. We see all the offers.
Right.
We're going to take them out, and it's going to take millions to do it because they've got millions to stay short. Right. But they got taken out, and now I'm thinking, you know what, Bruce? I bet you these guys have already shorted a ton of stock before they tried to defend the $50 wall. These guys may have shorted it all the way down to $38.50 3 or 4 days earlier, and they're short another 20 or 30 million shares, which they may have had been able to borrow and cover. But this batch here, I don't think they've been able to cover it. And whether they're going to do option rights.
I have a question. So how does getting a short position put downward pressure on a stock? I understand the supply and demand of buying and selling. Yeah. But how does the short drive the price down?
Oh, simple. Up until about 15, 20 years ago, the only way you could short stock if you were a shorter is you had to sell on something called the uptick rule. So if you had a stock, for example, in the old days, they used to trade in 1/8 of a dollar. So a stock would be like $50 to $50 and an eighth, or $50 and $50 and a quarter. You couldn't be in pennies, right? So in the old days, the stock would be 50 to 50 and a quarter would be the bid ask, and you want a short stock. Last trade, $50 a share. You can't hit that bid as a shorter. That's trading on the last sale. You can only offer stock at 50 and an eighth. The buyer, you have to have a buyer come up to you to take you out at 50 and an eighth. That's an uptick from the last trade, the uptick rule. So of course, shorting like that is a real restriction. You can't just arbitrarily hit bids. Today, right. I want to sell a million shares short, and I've got unlimited money to back it up. So I'm going to sell. I see the market 50 to 50.05 now because we trade in pennies. And I see that there's 40,000 wanted at 50. And I look behind on my level 2 trading machine, and I can see the 49.99 bidders, the 49.98 bidders, how much they want, who they are. And I can go down the line and go, down to 49.50, there's 100,000 wanted. But below 49.50, the next buyer is at $49. There's a 50-cent gap because no one thinks that the stock's just going to go all the way down to 49 quickly. It'll just slowly go, and that'll give people time to put in the buy orders. But if you're a short seller and you want to create havoc and get the people wondering about the stock's stability and all that, you hit the bid. And so the seller hits the $50 bid, wipes out the 30,000 buys, and then immediately tells the computer, sell at market another 40,000 shares. And it now trades at $49 in 5 seconds. It's down $1. Boom. No uptick rule. You just nail it. And so you crush the market by $1. You're averaging out at 49.75 on all the stock you sold. Last trade at 49, and you're offering stock at 49, or you tell the computer hit bids down to 48 in like 2 minutes. You're not giving people time to even put in buy orders. By the time people put in buy orders, the stock's already down $2 more, and they're getting filled at 48 when they thought they were going to buy it at 49, and now you're nailing it down to 47. And this is what's happening on the open Wild West market that the SEC has allowed and has been talked into by all these broker dealers from Wall Street. Every institutional banker down there has convinced the SEC that this is good for liquidity. And the reality is it's a great way to crush a market, is what it is. It's ridiculous.
Is there any rule that prevent echoing again? I feel like I might be.
I hear you, but you're cutting out a little bit. But to prevent it, the only way to prevent it is on the New York Stock Exchange, for example, and in GameStop in particular. The other day, I think the shares were trading at something like $110 a share on the opening. Like that was from the previous day's close, and the shares went down to 90 something in about 15 minutes, and then they came back to 105. So if you had gone for a cup of coffee at the opening, you missed this little blip that happened. But what happened in that little moment in time is the stock dropped by more than 10% in value from the closing price the day before, which automatically puts a new rule into place, not a new rule, it's just a rule that says the stock is now on a restricted short trading list. And that means for the rest of that day and for the next trading day, the uptick rule is in place for short sellers. That restricts short sellers from hitting bids. And I think what happened on that day was the guys who are supporting the stock and are trying to, run it up, they backed off and they let the shorters drop the stock down, and they let the market just drift down. They pulled all their bids. Sure enough, it went down to 90, whatever it was. Then they stepped in, bought it up, ran it back to 105 with very little volume. And we have the restriction rule going in. And for the rest of the day, the stock went up to 120 bucks with no resistance, because shorters could offer stock. They can offer stock at 105 or 106 if the last trade was 104, sure. But they have to show their hand. And shorters don't like to show their hand. They like to come in stealth. They like to come in and go, oh, there's 20,000 wanted. Let's sell that guy 18,000. Leave him good for 2. But, we didn't kill the guy's bid. We didn't fill it. So it's still bid at whatever it was bid, but we got 19 off or 18,000 off. And then they'll wait 5 minutes and go, oh, there's 28,000 wanted again at that bid. Let's fill it with 25,000 shares and then leave the 3,000 wanted. So nobody knows we're shorting it because the stock isn't moving. It's just trading, but it's not moving. Right. Well, what's happening is the short position is being built up over here. And as soon as these guys get to a nice level they like, now slam the bid, drop it down by $5-6, create a bit of a panic sell, and then be the good guys and buy it all back at $15 a share lower or $10 a share. All this liquidity has been created. Everyone's happy. The shorter just made himself a killing on the market because he manipulated the downside. That's what's going on. And now they're so into this game, and I think they're so overexposed on GameStop. These guys don't have the paper because they are these failure delivers are showing up all over the place, and it's just tens of millions of shares. And today, we had this run from 123 to 147 in 5 minutes. Mm-hmm. That to me was a buy-in. I think someone got bought in automatically, and that means market buys regardless of offers. And it popped whatever 20-something bucks a share in 5 minutes. Closed out at 130.
A shorter covering their position.
What's that?
You think that was a shorter covering their position?
No, that was a shorter being bought in involuntarily to cover their position. This is a nightmare scenario for a short seller. This is where the house buys you in and doesn't ask you for permission. They buy you in and say, you just bought this stuff at 145, 146, 147. And the buyer's going, hey, it was trading at 123 all day. What are you doing to me? Well, it was a forced buy-in because you're naked. You don't have the stock. We can't cover. We got to buy you in because we have to deliver certs to the clearinghouse. We're short tens of millions of shares. I am kind of guessing here. I'm not going to guarantee it's going to happen, but I saw it today in a small way. But I have a suspicion we're going to see a lot more of this going forward. And the nightmare is going to be a big one. As you know, when the stock went to 300-400 back in January, you heard about Andrew Left. He had 2 million shares shorted. He wanted to go on Twitter to tell the world that the stock is going to go back to $20 a share. And everyone attacked this guy on Twitter. And the stock went to 80 bucks instead. It didn't go down to 20, it went to 80. And he bought it back and licked his wounds for his 2 million share blunder. And he probably lost $100 million. 3 days later, holy moly macaroni, it's trading at 100, 120. And now here comes Melvin Capital with a $3 billion loss in a short position. We know what that is. It's GameStop. They lost their butts, and immediately Citadel Capital and another hedge fund invested in them for $2.75 billion. They made an investment. Yeah, that's called a bailout. That's what that is. They're bailing them out. That was 2 days later, and then 3 days later, Robinhood comes out of left field and says, "We just raised $4 billion." To salvage our brokerage company. And I'm thinking, what the hell is that all about? Why would you need $4 billion to salvage your, you have 8 million clients. You've got clients coming out of your ears who want to get in and trade your stock. What do you need $4 billion for on a stock, one stock that ran from 20 to $250, $350? That would create a $4 billion problem.
That's a good point.
Put your firm in jeopardy. What is that? I mean, how can Tesla go from $200 a share to $2,500 a share, split 5 for 1, come back out at $500 a share, and go to $900 a share, and no brokerage house had a problem with that? You got a $4 billion problem on a GameStop stock? The whole company is capitalized at $8 billion. What are you talking about? That's half the company's value. What is wrong with these guys?
Yeah, that's a good point. I never made that comparison. Yeah.
Have you heard an SEC investigation? Have you heard any? Nothing. They're going public now. They're announcing that they're going to do an IPO. Everything is normal. Everything's fine. We're going public with a sponsored deal through the New York Stock Exchange. I think they want to go. They're claiming they're worth $20 billion as a going concern. I'm thinking these guys are underfunded and are this close to going under on the next move that they must be somehow exposed to. I can't understand it. And you want to tell me that by restricting retail investors who want to buy a share of GameStop or 5 shares of GameStop, you're not going to let them buy stock in a company that's trading at $200 a share. They want to buy $100 worth of this stuff, $500 worth. They can't do it. You're not allowing people to buy stock with cash that they have. They've got cash. And so there are questions out there no one wants to talk about. And over on CNBC, have they interviewed anyone at the clearing company? Have they interviewed anyone with regard to nothing? It's like,
did you see that Melvin Capital, they posted 20% gains in February?
I love this one. Here, let me ask you this, my friend. Max, you have $10,000 invested in company whatever, okay? And you were wrong, okay? The stock went down on you, and it went down to $5,000. So you lost 50%. Oh, okay, you sold out. You take your loss. You're sitting there going, okay, I'll buy something else. So you buy something else, and it goes up $1,000. You sell it, and you're sitting there going, I got $6,000 now. But you know what you're going to do? Your PR department, if you've got the right PR people working for you, we made 20% profit last month from $5,000. Yeah, because you lost $5,000 already over here. You're still down 4 Gs. These guys at Melvin Capital did not get their money back. They are still down billions of dollars from the month before. They've only got a partial recovery. I mean, a dead cat bounce is a partial recovery. I'm waiting to see what their numbers are this coming month with the market taking a dump today. Maybe these guys have lost it already. Yeah,
it doesn't cost much to get an article in CNBC and all those others. Individuals can do it, much less a Melvin Capital.
Yeah, it's unbelievable. I try to tell my viewers all this as we're doing right now in a real plain English kind of way. Kids, do not be fooled by these slick guys, these slick operators in New York who are going to try to put the spin of spins on you. You think politicians are good at spinning? You ain't seen nothing yet. The Wall Street crowd are the kings at spin on making deadly, ugly financials come out smelling like a rose. I mean, we lost $15 billion, but our sales were up 4%, and our future sales coming up next month will be even better. Yeah, well, what about the $28 billion you lost and all the bills you're not paying? Unbelievable.
We lowered marketing costs. Yeah,
exactly. This is what I'm trying to explain to my viewers, that folks, don't be intimidated by these guys. These guys are slick as can be. I used to be one. I know the game.
So what do you think about all these companies that just have these wild valuations right now? We're talking price to sales of 200, PDEs of infinite. Like, what do you think about just how overvalued so many things are?
I laugh because I remember back in 99, 2000, when the dot-com bubble happened. I was in the Cayman Islands at the time. I was a broker down there. That was a fun time. And I remember there were companies coming public where the sponsors of the deal, the Wall Street sponsors, were saying, "Oh, we have a new company that we're going to do an IPO on. They want to allow you to buy groceries from the comfort of your house, and they will deliver these groceries to your door." And I thought, well, that's a neat concept. That's pretty cool. It's only 20 years early, of course, but I'm looking at this the prospectus. And I'm going, well, where are the financials? How are they doing? Well, they aren't. It's a theory. They're theoretically going to do this. And I'm going, what do you mean? You're taking a company public that has the idea of doing this rather than they're already doing it? At least DoorDash went public, 3 months ago? They're doing deliveries. Not that they're making money, by the way. DoorDash doesn't make any money, but they're doing deliveries, and they're $155 a share. I'm just going, this is insane. So today, you're looking at PE multiples that are just insane. And the Wall Street guys, as the markets kept going up and up, they came up with new terms and new ways to justify the stock pricing that would make it seem okay. In the old days, it was all about price earnings and dividend yields. But then dividend yields got thrown out the door. We don't want dividends anymore. We want growth. And we'd rather have companies buy back stock than issue dividends. Take the company money, buy back stock, rather than give the money to the investor, the owner of the company, to rob them of cash and just have fewer shares out, so that if you only make $1 billion this year and you make $1 billion next year, the good news is we're making more money per share because there's fewer shares to divide the $1 billion into. Right. It's engineering. And so they're engineering their deal. They're coming up with all kinds of ways to like you said, price to sales and all these ratios. And at the same time, you got to ask yourself, wait a minute, who is running most of these public companies? Are they the founders of these companies? No. Are they, have they got a big stake in the company? No, they're just managers. The presidents of a lot of these Fortune 500 companies have less than 1% of the stock. The entire board of directors collectively own 4% of the company, 6%. As a matter of fact, a bunch of the board of directors are parts of hedge funds and mutual funds that own stock, but they don't own the stock. It's their clients that own the stock. The actual shareholders and owners of the company are not running the company. It's all guns for hire. And if I'm a CEO or a VP and all these guys, and I'm running a company, what do I want to get out of it for myself? Hey, I'm not going to get any dividend income because I don't have any stock. The only thing I'm going to get are stock options. I'll get my salary, which is competitive with whatever people, and maybe that's too much money. But what I'm going to engineer is I'm going to engineer a stock program, bonus program in shares, comparable to everyone else out there who's exactly the same companies. These are all the same companies run by managers for hire. So it's very heavily stock centric. And Igor, the former president of Disney, the reports have come out every year. Mr. Igor is the highest paid executive in the United States. $100 billion he made this year. Well, yeah, he made $98 billion or 98 million, whatever it was, on stock. It was just his stock options he got 5 years ago. And then he got an option 4 years ago. And he got another one 3 years ago and 2 years. And he has another one for next year. And you add it all up, this guy, after 5 years of hyping the market and buying back stock off the street to get the price up, to get his option up. This is the game I would be playing. Absolutely.
Yeah, smart.
So
now aligned incentives.
Yeah, of course. So engineer the market higher, get your nice stock option worth a lot more money, and that's how they make their dough. And that's the deal. So the shareholders, they get no cash from dividends. They get no price appreciation of any significance because the company isn't growing. The company is using all the money it should be using to grow just to buy its own stock back to engineer the price higher on a PE multiple and on an earnings multiple per share. That's what's going on.
Doesn't Elon Musk have some kind of like long-term, like $50 billion stock bonus thing?
He has a deal that runs monthly. He cranked the deal at least 5 or 8 years ago that if the companies, I remember when the company broke $100 billion in market cap, as soon as it hit $100 in market cap and stayed that above that level for 30 days, a bonus would kick in. I did a video about it. And he got himself something like a 5 million or 10 million share bonus because the market cap of the company was above 100 million. Then when it hit 150, same thing, he got another bonus. And so within like 3 months, the stock went from 80 billion, the company went from 80 billion market cap to 120 market cap to 160 market cap and kept going. And he was just raking in bonus after bonus after bonus on stock. Now, he doesn't actually sell the stock. He actually hangs on to his paper at this point. But as the stock went up, what I loved what he did was as the stock went up, he would go to Wall Street and say, hey, listen, I want to raise $5 billion at 180 a share, 280 a share, 380 a share. I want to raise $5 billion. And Wall Street would go, yeah, sure, no problem. Here you go. And the shorts out there are trying to short his stock, and here he's sitting on another 5 billion cash, and the analysts are going, we're upping our estimates on the company because they're cash rich, they're debt free, and he's building Shanghai for cash, he's building Austin's factory for cash, he's building the Berlin factory for cash. He raised $30 billion, and the stock ran up all the way up to $900 a share. Unbelievable. Shorts got murdered on that deal, absolutely murdered. Unreal. But yeah, engineering of stock, what a game.
Yeah, I've never even thought about the incentives being completely wrong with just the market cap needing to go up or share price needing to go up. It doesn't make any sense to offer a bonus because just a share price goes up. I mean, you kind of see that misconception all the time in like a company who will have a share price of like $1, and then people think it's a discount. They're like, oh, this share is only $1, you know, it must be cheap. But then you look and they have 500 million shares and only 10 million in sales.
Right. That's right. That's right. I mean, I keep coming back to the GameStop story because of the fact that there's only 70 million out there total. That's all the companies issued because they bought back 35 million of their own stock. And I look at this going, it's a New York Stock Exchange company with only 70 million out. I mean, there are penny stocks on the pink sheets with 500 million shares out, 1 billion shares out. These guys have 70 million shares. I thought, you know what? If these guys were to make a profit of $70 million in a year, which for GameStop would take nothing. I mean, they close down these shops. Every store you close, you lay off 20 people because of all the part-time staff you have. You don't pay rent in the highest rental market in town. You're in shopping malls. You're not paying property tax at the highest rate in the city because it's a shopping mall deal. You're not paying a lawyer to negotiate 5-year leases every 5 years for all 5,600 stores. You offload 5,600 stores. You say goodbye to 250,000 staff. You say goodbye to all those leases. You work every bit of inventory with whatever's left, working it out of the warehouses with warehouse staff, and you're doing only online sales. For these guys to make a $70 million profit once they convert over to online is a joke. But I was thinking about this going, okay, let's say they make, $5 a share profit, $350 million in a year. Sales of $6 billion. They used to have sales of $9 billion. $6 billion in sales, make $350 million net. Great. Lower overhead. Fantastic. The stock, what would the stock trade at if they're making $5 a share? And I was looking at Amazon. I thought, well, what's the PE multiple of Amazon? Well, a month ago it was 95. Right now it's 70 something. Okay, 70. Let's just use 70. 70 times $5 a share, $350 a share for GameStop. It's trading at 120 something bucks a share. So then I thought, okay, well, what about Chewy? That's the company that Cohen co-created. Sold off to PetSmart, I think, for $3.5 billion, and then PetSmart took it public. Chewy trades at $45 billion market cap. They don't make any money. They don't have any profits. They have a $45 billion market cap, and they don't make any money. They've got sales, but they don't have $9 billion in sales. They got like $2.5–3 billion in sales. I'm going, wait a minute, wait a minute. If GameStop has $5–6 billion in sales, and they make $100 million on it, just $100 billion, 100 million, I mean, why wouldn't they be worth $45 billion? At least Chewy, because Chewy's losing, right? They'd be worth more than Chewy. But let's say it's just $45 billion. I don't want to be greedy. $1 billion market cap on 70 million shares outstanding, $600 a share. The stock's on 25. I've
never heard it broken down like this.
You know, the guys in Wall Street, all these analysts in Wall Street that you see on CNBC, there's one guy who brilliant, smart guy, really. I have no problem with his brains, but he values GameStop at $8 a share. He said it's an $8 a share company. It's a blockbuster. And the guy can't get it out of his mind that it's a blockbuster. And I'm going, why is this guy like this? And I'm thinking, I know why. I think I know why. His firm is not the banker for the company. The sponsor broker, they don't have one. They've been orphaned. There's no one on Wall Street that is the brokerage firm of choice for GameStop. Apple, every brokerage firm in New York would do anything for Apple. Just tell me what you want, Mr. Cook, you can have it. Same with Costco, same with Amazon. GameStop is an orphaned company. And what GameStop needs is a Goldman Sachs or a Morgan Stanley or someone to come to them and say, okay, we are going to we like the plan, what you have. You want to convert your company from a brick and mortar exclusive to a virtual e-commerce machine. It'll take you about 1 year to 2 years to complete the whole thing because you're shutting all these stores off. You're going to sell stores in Australia, New Zealand, England, and UK and Europe to other operators. You're going to get completely out. You're going to take your employee base down, way down to just your head office and the warehouses you have, which are in Texas, Mississauga, Ontario, and Canada. You have, I think, warehouses in Australia. And I think they have a warehouse somewhere in Europe. And you're going to ship from there worldwide, just like Amazon does. So your overheads are going to plummet for every dollar of sales that you have. We're going to help you with whatever you need. How can we do this? And one of my viewers said, what's the best thing that GameStop could do right now to get the stock up? And I said, there's one of two things they could do. The first one is more expensive than the second one. The first one is issue a $5 special dividend per share. Every shareholder gets $5 cash. That's $350 million handed out, 70 million shares, and all the shorters are responsible for a $5 dividend to everyone they've sold stock to. And there's just 140 million out there shorted. That's a $700 million problem you just given the shorters, and they're gonna freak. That's number one. But number two, this one I think is even better. Don't hand out any money. Initiate a stock split, 10 for 1. Take the stock from 125 bucks, $12.50 a share right now. It'll take 30 days to enact the split. The actual physical thing will take 30 days, but the announcement is made today. The split, 30 days from now, we start trading at 1/10 the price that we're trading at. All of you folks that have 10 shares, you're going to have 100. You got 1,000, you got 10,000. You're short 140 million shares, you're short 1.4 billion shares. And the stock between now and the date that they split will go from 125 to 500 a share, because by the time you do the split, they'll be trading at $50 a share. And the shorters are now 400% worse off. And I'm thinking, back in January, the hedge fund boys, I think they lost $6 to $8 billion collectively. But we only heard about the one, Melvin. I think that if the shares went to 500 a share and stayed there, which they will, that problem is $50 to $70 billion. And now we've got bankruptcies.
Why do you think they're not doing this?
They believe in their gut that this is a brick and mortar company and it's all a shell game, and they're going to go back to 15, 20 bucks a share when this all blows over. What they don't get is that the Wall Street Bets viewers are and Reddit people, all the folks who are talking, they know all this stuff. They're following this information from all kinds of sources, and the Wall Street guys are totally out to lunch. They still are thinking in the 60s, 70s, 80s, and 90s. The market closes at 4 o'clock, and then we go to the bar until 6, and then we go home to our girlfriends and have a good time. That's the way it works. And between 4 and 6, we get all of our tips and ideas of what to do tomorrow. That's what they think is going on. They're old school. They just don't understand that 24 hours a day, 7 days a week around the world, people are comparing notes on what's happening with GameStop. I think we do have an echo.
Are you echoing now?
I hear a little bit, yeah.
Oh, geez. Let me see if I can figure this out. I'm not sure what. I haven't changed any settings, and it's going on and on. All right. Do you have an echo now?
No, I don't. So
okay.
I think these guys are old school, and I think their managers are in their 40s and 50s, and I think the top guys at the hedge funds are in their 60s and 70s, and they don't believe and they don't understand the power of a site like Wall Street Bets, the Reddit world, all the offshoots. I even have a page on Reddit that one of my viewers created for me because I haven't got time to do it. And I've got over 4,000 followers on my page there. I mean, they're talking about GameStop and all the parameters and all the variables that are going on here. And these guys are old school New York thinking, well, you know, the company's just a brick and mortar company. It's not going anywhere. They don't get it. They don't believe it. And I think Ryan Cohen in Texas with his guys are going, yeah, watch what we got planned. Because you think this guy bought 9 million shares because he wanted to go from 12. His average cost is about $7. You think his cost, he's happy going to $15 a share and then cashing in? I don't think so. This guy is going to take his investment of 76 million and turn it into billions of dollars, and it's going to be handed.
Well, it was 700 million at one point.
Yeah, it's going to be much more. Because he's looking at the pricing of all these online stocks, all these online sellers. I mean, you figure out eBay, you figure out is a Shopify, and I can't even rattle them all off. All the online sellers are trading at unbelievable multiples or price to sales ratios out of this world. And
do you think the CEO is on his way out pretty soon from Ryan Cohen? You know, they just kicked out the CFO, or it's scheduled to be this month.
My hunch is probably not. I'll put it this way. I don't think Cohen wants the job. I don't think Cohen wants in for the job. I think what Cohen is going to do is let's find people for these jobs from very successful e-commerce companies, and I'll stay up here at the board level, and I can be kind of up here as an advisor to the company, because that frees him up to just be out there to talk
Right.
to people and commiserate and not be tied up with a 60-hour or 80-hour a week job, because that's what that is. And I don't think Cohen needs to be tying himself up like that. He's better off as a quarterback calling the singles and letting the running back take the ball and you go through the line while I figure out the next play with the coaches here at the board level.
I find it really odd that the CEO, at least as of like last week when I looked last, hasn't had a single comment on all of this chaos.
Yeah. No one has. No one.
It's so weird.
Absolute silence. And it's, I think what's happening at GameStop, one of two things. Either the in-house lawyers, which should be securities experts, are saying you cannot speak. Because if you say anything about what's going on, you could be accused of manipulating the market or enacting a material change. And I think the second thing that might be happening is maybe right now, for the last month or two, they have been talking to Wall Street. Maybe they have been quietly behind the scenes, off the record, talking to some of the bankers over there, and they've told them, don't say a damn thing, because let Congress do what they got to do. You don't want to even make a peep while those guys are doing what they're doing. Let Robinhood guys sit in front of Congress and say, "Oh, thank you very much for the question. I really am happy to be here. I want to, let that guy do that. Let the Citadel guy do that. Whatever. But you guys just stay back, stay quiet, and no one can accuse you of any of the stock trading issues that have been going on, because you haven't created anything." And so sometimes it's better to say, not even say I'm innocent. Don't even say that. Just don't say a word. That might be it. They might be under a gag order.
Well, I've been saying too, it's kind of a rough position for the CEO to be in, because his shares a year ago were worth about $20 million, and they saw him go up to $750 million at one point. And he's like, I know they're not worth this right now. I wish I could sell these off, but the CEO can't just do that without a terrible look. So, he's just like, I'm sitting on $750 million that isn't going to be mine in
they have to file papers with the SEC anyway. They have to file an intent to sell. You have to fill out forms in advance. You might have to be in a position to notify the SEC 30 days in advance before he can even sell the stock. He didn't even know 30 days before it was going to do that. So it would have been a lucky guess had he wanted to file it. But my other guess is that they've sat, the existing board and management have had multiple meetings through Zoom calls and whatever else with Ryan Cohen and his guys, because there's a new sheriff in town, and these guys and some other activist investors control the shots. And I think the mutual funds who own blocks and blocks of stock have said to management, "We're going with your Cohen boy. He's the guy that we want to go with. Go with what he wants to do, and you've got our full support." And I think management's going, hey, look, how can we lose? If it's wrong, we can blame him. If it's right, we win. And so Cohen is coming to him saying, guys, the fact that you can't sell your stock right now or even talk about it, you're not going to give a darn about this in about a year from now. Because in a year from now, when we get through doing what we're going to do with this company and completely turning it over to another level, we're going to be trading at prices you never thought, and you never imagined prices that we're going to be trading at. Absolutely can't imagine it. And I think they're buying into it. They're going, well, yeah, Chewy is $105 a share. Amazon is $3,000 a share, trading at 70 times earnings. Yeah, okay, take me to the promised land. And if it's wrong, hey, we go back to the way we were, but I don't think we're going back to the way we were. We're not going to be that sleepy little retailer with $5 stock and 70 million shares shorted. We've already had the big explosion. And in this last week and a half, I think that Cohen and the other guys have realized, look at how the stock is reacting since last week, Wednesday. It did not go up from 50 to 120 and back to $20. It's staying there. It's staying up there at 125. It's not coming off. Why not? We haven't said a word. There's no press releases. There's no word, and yet it still won't come off. And that's telling me, yeah, we've got a structural thing, and I haven't even told you about the options yet. There's the options.
Let's hear about the options. I have a question written down here about options, so I'd love to hear about that.
Well, my thinking is that there are probably, I don't know how many hundreds of thousands of contracts trade on a GameStop, but that's not unusual. All companies have options trading on them, and they're trading in the Chicago Mercantile Exchange. That's what they do. That's their specialty. But the activity of options trading on GameStop in the last 3 months has been unprecedented, has never been to levels we're seeing now. And the amount of contracts that are being bought in the money are unbelievable, because I think what's going on is there are some shorters out there, not the big boys, but I'm kind of thinking medium-sized players, there's players out there with 200,000 shares short, 300,000 shares short, and they're worried that if they had to buy that stock in the market, at market, they'd run it $50 a share because of how thin it is. They want to get the stock back without paying the big money. One of the strategies I think you can use is on the last day of trading, tomorrow, for example, contracts trade tomorrow night at the bell. Why not around noontime pick off a bunch of $50 call contracts that die tonight? They're going to cost you $100 each if you're trading at 150. They're going to cost you $70 each if you're trading at 120, plus a little premium. The premium's only a couple hours. Pick up a bunch of these contracts, the 45s, the 46s, the 47s, the 48s, 49s, all the way up. Get your fill of contracts. At the end of the day, notify your broker, I want to exercise my contracts. And so now you tell Chicago, deliver me the paper. The market maker has to deliver the paper. The market maker is short. He doesn't have the paper. He created the options markets months ago when it was trading at $5 a share. He was selling 50s to morons who wanted to buy way out of the money calls. There are 50s and 60s and 70s and 80s and 90s all the way up. And if the stock goes to 175 tomorrow, you can add another $50 of exercise prices that are all in the money now because they were 125 yesterday. We're now at 175 today. That could be 20 million, 30 million shares that are in the money on contracts. Who's
so for those listening, can you do some defining of the terms in the money, strike, call, put, things like that?
Well, if the shares trade at $120 a share and you buy a call contract at $120 a share, that is at the money. That contract is you have the right to buy stock from the seller of a call at $120 a share, or you can just buy the stock on the market for $120 a share. Your call contract has one value and one value only. How much time has it got before it dies? If the contract has a week to go until next week, Friday, it might be worth $3, $5, $8, $10 a share based on the volatility of the stock. If you buy a $130 contract tomorrow and the stock's at 120, you're out of the money. You're buying a contract that has the stock has to go up $10 for you to get at the money. So you're going to pay less than paying for a $120 contract because it's $10 out of the money with a 1 week time frame to go. But if you buy a 110 call contract, it's $10 in the money. You can buy stock from that seller of that contract for $110 a share. The stock's trading at 120. If the shares go to 130 before the close on Friday night, you're $20 in the money. Now, you may have had to pay $12 or $15 or $20 to get that contract because, again, of the volatility, it'll be worth 10 book plus premium time. But if you buy $50 calls with 2 hours to go or 1 hour left to go in the day, they're well in the money. Almost all the money you're paying for that contract is book value. You can buy the stock at 50. It's trading at 120. You're prepared to pay $75 for that contract. In other words, $75 a share times 100 shares per contract. That's a $7,500 purchase of one contract. You need 100,000 shares to cover your short sale because you're short 100,000 in your account over here. You're going to need to buy a certain number of contracts divided by 100. That's what you're going to need. I think it's 100 calls. You're going to need to buy 100 of these at 7,500 a piece to, in effect, get the stock. The reality is you want to buy the stock at $100 a share because you want to get off of your short position, but you don't want to buy 100,000 shares on the open market because if you do that, you might run the market up to $150 and you didn't get it at 120. You got it at 140 or 142 by the time the dust settles. Here, you buy the calls and they're $40 calls all the way up to $55 calls, averaging maybe $50 a call. It doesn't matter. You're going to buy all this stock when it's all said and done around $120 to $124 with some premium because the contracts are almost expired. Then you tell your brokerage firm, I would like to exercise my right to exercise this contract. I'd like to buy these shares for the exercise price that I bought them at, what they were issued at. And that's from 45 to $55 a piece, averaging $50. There you go. You're handing the Chicago market maker enough money for 100,000 shares at $50. You've already handed the sellers of the contract the 70 odd bucks already per share. You just paid 120, 125 for 100,000 shares. And now the Chicago market maker is sitting there going, or whoever is called on these contracts, whoever wrote them, they have to either cough up the stock or they got to go get the stock, and that's by Monday. That's the next trading day on Tuesday. And last Monday, the shares were $100 on the opening. At the end of the day, they were 120 to 125 because there was a whole bunch of buying coming in to cover. That's what I think could be happening. Yeah. But I think this problem is getting larger every Friday. I think there are more contracts in the money every Friday at settlement time, and this is amplifying this issue where shares have to be acquired by Monday to deliver against calls that are being exercised on Friday. And I have heard and I've seen reports that there are apparently tens of thousands of contracts in the 150 to 200 range. I mean, at every level, all the way up to $800 a share for the next 3 months. And if the rumors are true that the shares will rise and rise and rise due to the shortage of stock, as people have to continually buy more to get covered, more contracts will become part of the issue here. The fact that they need to be acquired, exercised. And if you're going into the millions of contracts, we're talking about maybe 500 million shares that need to be purchased by option writers, and there's only 70 million in existence, and the shorts up there. So where are they going to get it from? You got to convince someone to sell it. Well, to convince someone to sell GameStop, well, give me 500 a share. I'll give you some there. I'll give you some at 550. I'll be a gentleman. I'll give you some at $599. Exactly. I'm a great guy. That guy wants 600. I'm a good guy. So this is also possibly part of the whole thing. And I'm just throwing this out there because all of this is circulating everywhere, all over the internet, all over different places. But no one person can say, well, I can show you in writing exactly how this works. Well, no, because if you're and you're on the hook for this, you're not talking. You're not. You don't want the world to know you're in trouble. You're not going to talk.
Right. I think what we're realizing too is they have infinite options. You know, there's not an options contract, but you know that's one potential option that they have. What you just explained. There's probably 20 more that we haven't thought of, that they could, you know, manufacture some kind of workaround, you know, like how they're shorting index funds that hold these stocks and to not increase the short interest, how they can be opaque about what stocks they are shorting, or potentially change their short positions right before the reporting dates, and then the day after the reporting date, you know, increase their position. There's just like unlimited options, it seems like.
Well, you know, at the end of the day, it used to be that the company at $5 a share had a market cap of $350 million, and there were 70 million shares shorted on that company, and everybody had an issue that was less than $1 billion, all in, all parties, everywhere. Now we're dealing with a $125 stock, and I don't know how many short shares we're talking about. We're talking about 200 million shares in total. We're now talking about a $25 billion issue happening here, where the company is worth about 10 billion, and there's 15 billion to 20 billion of stock shorted in whatever instrument you want to describe, all over the place. This thing goes to $500 a share. You are talking about a $100 billion deal here in stock values, where there's only 70 million shares that actually exist, and the rest are out there. This is becoming a bigger money problem. The stock numbers might be exactly the same as they were when it was $5 a share, or $20 or $40, but the dollars associated with the problem are amplifying, and they're amplifying faster each time. And so today we had a little spurt within, like I said, 5 minutes. Right. The stock went up almost $23 in 5 minutes. I'm sitting here going, holy moly, if this guy, whoever bought this stock, and they didn't have to buy millions of shares, but it traded. But if they have to buy 10 million shares on a quick buy like that, that's not going to go up $27. It's going to go up $200. And so at that level, you've got even more problems surfacing, because the higher it goes, the bigger the problems, and the more declarations of financial angst will start to come out. Entities will be undercapitalized. And what about Robinhood? We come back to these guys, or Fidelity, or any of these other guys. Are these guys now going to be told by their clearing firms, you need 500% margin to play this stuff? I don't even know why that would be, but Robinhood used the excuse that it was the clearing entity that put the major twist on these guys. And at the time that this first squeeze happened, you were asking me about AMC earlier today. that happened on Bed Bath & Beyond. It happened on all the other stocks that were meme stocks, all the Reddit
Rocket
memes.
Mortgage 2 days ago.
Dozens. Yeah, dozens of them, all back in January. Well, now we're talking March, and I'm wondering how many this time, and how many tens of billions more are we dealing with? And we may find that Robinhood needs $20 billion or $5 billion or $8 billion to cover their next position. I don't know where they're going to get it from. And what happens if other brokerage houses have to come up with billions more to cover their positions? They're going to go to their customers. They're going to go to their hedge fund clients and say, look, we were giving you all kinds of leverage to play the market. We're taking all that leverage away. We want cash. Well, hedge funds are have to come up with $5 billion each, $8 billion each, $10 billion cash. Now, cash. Where are they getting that from? You're going to have to sell stock to do it. You're going to have to sell bonds or treasuries to do it. This could create a catastrophe that just multiplies itself out. And yet the GameStop shares just rocket up. I mean,
So where do you see this playing out in the next 2 weeks, 4 weeks, 6 months? Do you have any projections?
There's only one way for this to all go away. There's one solution to the whole problem, and it's simple. GameStop has to issue stock from its treasury on a secondary financing. If they were to create new shares from their treasury, they could take care of a whole bunch of short people that are short. Easy. We'll just give the market more stock from our treasury to lessen the stress of the short scenario we're in. But you're at GameStop and you're asking yourself, why
would they do that?
Why would I why would I sell stock from the treasury at $120 a share when I know that there are 140 million shares out there and only 20 or 30 million are actually accounted for, and the rest are all synthetic and they're all in, they're all circulating around somewhere, failure to deliver. I mean, on and on it goes. Wall Street is the problem. Wall Street has the problem. Why doesn't Wall Street come to GameStop and say, I'll tell you what, let's negotiate a deal. How about you issue 30 million shares at $500 a share? Here's $15 billion. Let's all be friends now. Make this all go away. And you guys have done well, and your company's funded with $15 billion. Your shares will never go under $300 a share again because you've got $300 or $200 of cash per share now, and you're like Apple. You're just rich as hell. Now you guys can go buy companies and merge with companies. You can change everything you want, and we get 30 million shares to distribute to all of our nightmares all over the place. But I don't think that's going to happen. I don't see the lead negotiator anywhere, and I'm wondering if the SEC has to step in. And what are they going to do? There's nothing bad they can do to existing shareholders. They're not the problem.
You have your rights. Yeah,
investors that are the problem. It's not like mom and pop who bought 5 shares on spec because they read something on Reddit. They're not the problem. The problem is the hundreds or thousands of hedge fund players on both sides of every market all over the place who are completely out of control to do whatever they want. And they write the rules along with their Wall Street members, the members of the New York Stock Exchange, the members of NASDAQ. They all create the trading rules, and they all set the parameters of how we do business together. And they're the ones who do it. And you and we can read a report anytime you want, I want. We can go on to Google and we can enter a little thing saying, how many shares, who owns shares of GameStop? And it'll tell us the list of all the mutual funds and all the hedge funds, how many shares they have and what their names are. And I can even get their addresses. Now you enter how many shares, who is shorted stock on GameStop, and you wait hours. You're going to get nothing because there's no rule saying that anyone has to declare a short position on any stock in North America. In Europe,
I think that's the case just because if you had to be transparent about your short positions, it would be so much harder to make money. It would almost, as an individual, it almost just doesn't even make sense unless you can manipulate the market to short something, because there's potential for infinite losses. Or if you're, in my opinion, I'm way better off just buying any old stock instead of ever shorting anything.
Or buy a put. If you think it's going down, buy a put contract and you'll make money if the stock goes down. But in Europe, while we're talking here about the non-disclosure rules in the United States and Canada, over in Europe, if you short 0.5% of a company's stock, you have to declare it. And they're talking over there now about making a new law, 0.1%. You short 0.1% of any public company, you have to declare the short position. Well, that will change everything. That will really take these, I would say, marauding hordes of hedge funds who are going to launch a short sale attack on a public company. How many public companies have been shorted to death in the last 15, 20 years? I bet you the list is a mile long, because it used to be in the 80s. This is before your time, but when I was a broker, the game then was you would buy up stock of a publicly traded company and then put your people on the board of directors, and you'd then pick the president you wanted, and you control the management of the company. You take it over. You'd have like 12% of the company, you'd buy it up.
Carl Icahn, yeah.
Yeah, then what you did is you then took the company and made it borrow a bunch of money. And the money was borrowed to buy stock on the open market at much higher prices per share. You just ran up the price of the stock, because why? You own a bunch of the paper. You want the company to run the market up so you can get out. They would run the company up into bankruptcy and then let the whole thing collapse. And all the bankers would be out the billions. The shareholders would be out everything who were left. But these guys had sold their stock ages ago and got out, and they would even short it on the way up. And and that was
one last kick while they're down.
And that was all legal. And that happened hundreds of times with gazillions of companies through the 80s and the 90s until that was, kind of kiboshed. But again, notice—
How was that kiboshed? How did they stop that? How did they stop that?
They came up with the various Congress rules. Came up I'm trying to remember the name of the Bain-Sorban Act. They came up with these acts to forbid undeclared positions and the over leveraging of companies. I can't put my handle on it, but it all died. I think Wall Street also decided we're not going to do that anymore. We don't look good doing this. We don't want to be doing that. But
yeah, I mean, anything anti-progressive like that, where you're just killing companies, it just doesn't make sense to me.
Look at the movie Wall Street, the first movie Wall Street. That's where the dad was working for the airline. The son wanted to be a stockbroker, and the bad guy was Gecko, which is Michael Douglas, the actor. And I think they were going to crush the airline. They ran the stock, and they were going to run the airline into the ground and cash out. And the kid stepped in the middle and saved his dad's airline and all this stuff. That's part of it. It was these leveraged buyouts is what all was. But you take a look at Payless Shoes. If you remember the company Payless Shoes, that was a strong, profitable corporation. They were just picked up by hedge funds. Hedge funds bought the stock, took the company private, and then they ran the debt up of the company and crushed it. They got all their money out when they bought, because they were the owners of the company. They took all their dough off the table. They leveraged the company up to the nines, and then the whole thing collapsed, went under, and the hedge fund had made billions of dollars. And this has happened on hundreds of other companies since. So they're still doing it, but they're doing it in a different way, where they privatize these entities first and then run them into the ground by having them borrow way too much money.
So besides GameStop, is there any other stocks that you're looking at? I know you don't buy any, but is there any that you're looking at as potentially good deals right now?
Well, I mentioned to my viewers that I have a list of stocks that I like, and I go over them. There are six SPACs I like that have announced their deals, and I mention them every day on my show. And then I have an ETF that I like, which is the SMH. SMH is a symbol. It's the vector computer chips shortage. They're semiconductor fund, the Vector Semiconductor SMH. They're going to cash in because of the shortage of chips worldwide. That is becoming a big problem.
They just signed an executive order for like $37 billion in funding to direct towards that.
Yeah, I think that's a license to print money for anybody who buys these stocks. But if you buy the ETF, you don't have to worry about which one to get. You got all 60 or so inside this thing, and you can just sleep at night. But yet today, it went down $11 a share. The ETF dropped $11 today because of the sell-off. Wow. Ridiculous. This so-called interest rate scare nonsense, this is absolute hooey. I think this is an excuse for those who are shaky holders to get out, and it's probably a good thing for the market. Shake out the loose, peaches that are hanging on the tree right now, and the rest will thrive. You got to get them out of here.
30%. Just cut it off.
Yeah, it's time to shake out some loose hands and stabilize this market. So maybe we're in the middle of it now or towards the end of it. I don't know.
I'm fixing it again. I don't know why I came back.
Well, this show's going pretty good. You got 2,000 viewers right now watching you live, so that's not too bad.
Not too shabby.
Yeah.
All because of you.
I hope everyone's enjoying it. We have a lot of fun. I tell you, it's unbelievable to me. I've been out of the business now. I have not been a broker or an advisor since 2000. Follow it, of course. I still follow it. I love following it, And I sit back and I just shake my head at the crap that's going on. I thought 2008 would be the moment in time where everything would work out because of the housing crisis. If you watch the movie The Big Short, the whole world collapsed, or was this close to the entire Armageddon of the financial world. Warren Buffett was phoned at a Dairy Queen by the head of one of the banks, and the guy said, "Warren, I need $5 billion right now to invest in my bank." He said, "Okay, I'll give it to you in a preferred option, a preferred share, 10% yield, and convertible into your stock for 5 years." Done. Over the phone, 30 seconds, and then he went back and played with his kids at the Dairy Queen. And that was a sweet little deal for him. Saved, I'm not sure which bank he saved. And the Geithner and the guys had to literally force the banks to take $200 billion of cash from the federal government, from the Treasury. Like it or not, you're taking this money. We're buying preferred stock in your bank. You're going to pay us 6% interest on the money, whether you like it or not. And at the end of 5 or 8 or 10 years, we'll take it all back. And we want you to lend the money. We want you to take this $200 billion and lend it. And they didn't, because there was no law saying they had to. And they kept buying back their stock and gave their executives bonuses, and the private jets were upgraded to Gulfstream 5s from Gulfstream 4s. It was all good times. But then Congress had to pass a $700 billion package, which they did, to salvage the system and all the housing systems and all that toxic debt. And it took 5 years for the United States to kind of come out of it. I thought, okay, this is your chance to clean house and really clean up your financial system and make it all better. And they didn't do it. They didn't do it. And here we go again. And we've got this little problem with GameStop. This is just a little taste of what's out there. And I wonder, wow, what would happen if a medium-sized capitalized company gets into something like this? And we've got trillions of dollars on the line, like hundreds of billions being played with. It could be an absolute nightmare. And so that's where I sit right now. I'm just trying to run my people through day to day what's happening in a plain English format and say, guys, here's what I see. This is what I interpret is going on. This is what they're saying. This is what's happening. But this doesn't add up. There's something in the middle that's not working, because what they're saying and what's happening, it doesn't actually jive with me. And on the GameStop story, it absolutely not jiving at all. And I don't know whose fault it is. I don't know if it's a New York Stock Exchange issue. It might not be. Is it a clearing system? Maybe. Is it the board of the Chicago folks that are allowing unlimited calls to be written, puts to be written, and naked contracts? Or is it the clearing system where shares can go into non-delivery status to the nth degree, 21 days of time for a brokerage firm to deliver paper that they were supposed to deliver 2 days after trade? And now they're talking about going to same-day settlement. They can't do that. You don't have the paper to do that. I'm wondering if today I saw 4.4 billion shares down in volume, 2.2 billion shares up in volume on my television set at the end of the day. I go, 6.6 billion shares traded today. And then I thought, how many shares actually exist? Are there actually 6.6 billion shares in existence? I understand there's day trading. You buy and you sell, you sell and you buy and all. But I'm kind of going, the brokerage community now actually almost in a way doesn't care what the price of the stock is anymore to make their money. If you're trading commission free, they're interested in your volume. Because if you buy 1,000 and you sell 1,000 and there's a spread in between, the brokerage firms are taking their little slice of the action. And the more you trade, the more they make. And I'm going, so what if it's 125 or 75 cents, or it's a 250 a share or 1,700 a share? It doesn't matter. There's a spread between every trade, and it's volume that pays these guys. And so 6.6 billion shares of volume. I'm sitting there going, oh, how much money did the brokerage firms make today on a down day? There was a whole lot of people lost a lot of capital today, but I don't think the brokers lost a darn thing. They got 6.6 billion delivers.
Robinhood, they were echoing again. Okay, I think I'm still echoing. Let's see. How about now?
It's better.
I'm echoing. It's better?
I think so.
Oh, you know what it is? I'm playing through the speakers of your computer, and it's being picked up by your mic.
Okay,
That's what it is.
that could be it.
Okay. What I was saying about Robinhood is they talked in that testimony about how they have like, the confetti and things like that to like make it more of a game to buy shares.
Yeah.
And yeah, it's turned into a casino because the incentives are there. I don't know if the intention was to do something wrong, because I think the intention was, hey, free trading makes it more accessible, more people will do it, our business will thrive. And then it has this secondary consequence where everyone now has to do free trading.
Yeah.
And it's more accessible, and then turns into some chaos. So it's probably just like always, history doesn't repeat itself. It rhymes. There's going to be some other bubble that we didn't see coming.
That's right. I remember I was in Las Vegas with my wife. We were traveling, and we were waiting for. We wanted to stay in the Cayman Islands, and we had applied for a permit to be self-employed in the Cayman Islands. And in the end, we couldn't get it because I wasn't hiring enough Caymanians to work for me. I didn't need any. But there was about a 2-month window where we were in limbo, and we couldn't be on the island. We have to be off the island from the Cayman Islands. And so we were in Las Vegas, and I could rent a hotel room at the Excalibur for $20 a night for my wife and daughter and I. And so I thought, well, that's like $600 a month rent, and they do the sheets every day and whatever. So we were there for about a week. And during the day, I'd have some time, and I'd walk over to the New York casino, and I was playing the nickel slots, dime slots, just passing the time. And I had my card in there, and I would realize how many points I were racking up playing these games. And I would go to the counter where they had these sign up for your card thing, and I'd say, well, what can I get with this card? And the guy would say, oh, you've already got $150 cash back, and you've got a free meal at the steakhouse, and if you want, you can probably stay free with us if you go into the casino high-end room over here. They'll take a look at your play. I said, oh, okay. So I went in there, and I said, hi, I was sent here by your thing over there. I got this card. I'm playing the slots. Is there anything we can do here? So, oh, let me look at the card. So they put the card in the computer, and they went, oh, yeah, your play. They said, how long are you in town for? I said, well, I think I might be in town for 2 more weeks. They said, you can stay for free. I said, let me ask you a question. Why can I stay in your casino for nothing when if I walk off the street and I go to your front desk and rent a room for the night, you want $99 a night? You're giving a room for nothing. They said, it's simple. It's the amount of play you're doing. It's the amount of action. We don't care if you lose money. We don't care if you make money. All we care about in this department is your turnover. How much cash are you putting through the machine every hour, every day, over the time you're here? Right now, you've got enough action on your card. You've got 5 free nights of accommodation right now. The next 5 days that you play, you're paying off the next nights going forward. You're here for 14, you got 9 more nights to play, and we've given you a 5-day head start. And it was just the action. And I'm now looking at what, just like you said, the Robinhood guy, exactly the same thing. They're making it so much fun to buy and sell stock, and the confetti is going, and the balloons are going. And then there are brokerage firms that are offering all kinds of promotions to open accounts and everything else. Is it any wonder? It's no longer a money business. When I was a stockbroker in 1980, if you called me up and you had to phone me, you wanted to buy $5,000 of GameStop shares, I would say, okay, I'll tell you what the stock price is, and I would punch in the quote on my computer that would give me one quote at a time on the entire screen, and I would say, oh, it's 120 to 120 and a quarter, and you'd say, I'll buy $5,000 worth, let's say. All right, great. I'm going to buy you 400 shares or whatever the heck it is, or whatever. So I would put a $5,000 order together for you. I would hand it to my desk trader, who would pick up the phone and call the floor trader, who would then yell it out to the guy at the post who would buy the stock, hand signal him back. He would then pick up the phone and call the desk trader. You got it at such and such, who would then write the ticket out and take a carbon copy for the house, a carbon copy for the back office, and give me a carbon copy for my files. I would grab the piece of paper, go back to my office, call my customer and say, Max, you got your $5,000 at stock at blah, blah, blah a share. Oh, and by the way, send me a check for $5,150 because the commission is 3% on the value of the trade. And you would gladly do it because that's what everybody did. And then if you called me a week later and said, Bruce, It's up. I want to sell. We can get out at $6,000. Fantastic. I would do the same thing all over again. Call you back and say, Max, I got you out, and you're going to get a check for $5,820 because we're taking $180 on the way out, 3% off the trade. You just gave me $330 in commissions on a $5,000 trade that turned into $6,000. That was the market. But of course, for that, I would take you out for a beer, or we would go out for lunch once in a while. Because if you were an active trader, we were hanging out from time to time, and you would talk to me in person. Today, it's all click, click, click. And at Christmas, do you get a Christmas card? On your birthday, do you get a birthday card? Do these guys take you out to lunch? Can you visit a person at an office for one-on-one consultation about your retirement plan?
I don't think you can even get a hold of their support if you wanted to.
That's right. There's no phone number. There might be a number no one answers. You're going to be directed to the frequently asked questions and answer section to get your answer of your problem. Yeah, this is the way it's gone. And the SEC has said, oh, this is great. This is wonderful. The brokerage business has said, this is the future of investing. This is convenience for our customers. This allows customers instant access to the markets. This gives them faster execution. This gives them this, gives them that. Yeah, if they know what the hell they're doing. But they don't know what the hell they're doing. Most of them don't know what the hell they're doing, and they're being slaughtered by the pros who are in the middle of all these trades, and including the brokerage firms taking their slice of the action all the way along.
Right.
Unbelievable. Anyway, listen, I got to get going.
I was just going to say, I know it's really late there.
I'm on tomorrow morning for another 5 hours.
We'll catch Bruce over at his channel. Make sure you subscribe. He's obviously a wealth of knowledge. I appreciate you joining us on this stream. Bruce's channel is linked in the description, so make sure you click that link and subscribe to his channel. Let's get him to 100,000 subscribers.
Help me get to 100,000. That would be great. Max, thank you for having me tonight. I appreciate it very much. I wish your channel continued success. You're on a roll. Keep it going, buddy. We'll reach that 250,000 and beyond. And all the best to your viewers wherever they are, probably around the world. I'm sure you've got a wide audience.
Yeah.
And it is unbelievable for I know for myself, and I'm sure speaking on your behalf, if we ever went into a stadium and saw 60,000 people sitting there and they were all our subscribers, we would be dumbfounded. I wouldn't know what to do. Where here, I can just talk to a computer screen and talk to you one-on-one, knowing that while we were here, there were probably 10 or 15,000 people that came through here and watched some of this. It's incredible. What a technology. And I love it. Thank you again for inviting me. And one day I'll get you on my channel and we'll have fun.
Let's do it.
There, the bagel crowd that watch me eat my bagel every day, they're gonna have fun because they're gonna want to know what you like.
Yeah, yeah, I'll do it anytime. Just let me know when. I'll be there. Thanks again, Bruce.
Thanks, guys. Take care.